Welcome to Charged Alpha. I'm Hudson, joined by Lana. Today's chapter, Fox Corporation, the media company that just delivered a 42% earnings beat and is building its streaming future around Tubi.
Fox Corporation was created in 2019 when the Murdoch family separated news and sports assets from entertainment properties sold to Disney. Lachlan Murdoch leads as executive chairman and CEO.
Fox News has been the top-rated cable news network for over 2 decades, commanding premium advertising rates and subscriber fees, generating the majority of Fox's operating profit.
Fox Sports holds major live rights, including the NFL, MLB, NASCAR, and the Champions League. Live sports is the most defensible content in media. Advertisers pay top rates, and streaming can't replicate the scale.
Q1 fiscal 2026 revenue came in at $3.74 billion, beating estimates by $170 million. Adjusted EPS of $1.51 beat consensus by over 40 cents, strong on both lines.
Advertising revenue grew 6 to 7% despite no prior year political spend. Tubi is the key growth driver. Its free streaming platform now reaches over 90 million monthly active users.
Tubi is Fox's strategic bet on the streaming shift. The platform is free, funded by advertising rather than subscriptions, competing on ad-supported reach rather than on content spending arms races.
Fox announced Fox One streaming, bundling broadcast content with a pay TV authenticated experience. Fox News, Fox Sports, and Fox Entertainment moving together toward a streaming native delivery model.
Fox's moat has 2 layers. First, live programming. Fox News and Fox Sports generate audiences that require real-time viewing, retaining advertising value that time-shifted content structurally loses.
Second, Fox News viewer loyalty. Churn is among the lowest of any cable channel. That audience fidelity translates to pricing power with distributors and advertisers that has held for over 2 decades.
Cable generates roughly 55% of revenue with the best margins. Broadcast adds 35%. Tubi and digital make up 10%, the fastest-growing segment in the portfolio.
Adjusted EBITDA in Q1 was $1.07 billion. Fox's asset-light content model, live rights and acquired programming rather than scripted originals, keeps production costs structurally lower than Disney or Warner.
Versus Paramount and Warner Bros. Discovery, Fox carries far less streaming debt. The decision to build Tubi on free advertising rather than subscriptions avoided the cash burn that burdened both competitors.
Versus Disney, Fox competes narrowly in live news and sports. Disney owns ABC, ESPN, and a full scripted library. Fox is deliberately narrow. News, sports, free streaming without the studio overhead.
Lachlan Murdoch has led Fox since 2019 as executive chairman and CEO. Previously, he ran News Corp's Australian operations and was involved in Murdoch family media businesses since the 1990s.
Lachlan kept Fox focused on its core strengths rather than chasing content libraries. Letting Disney buy the entertainment assets and keeping news and sports has proven strategically disciplined.
Fox operates television stations in the largest U.S. markets, Fox Sports regional networks, and distribution deals with every major pay TV operator, giving Tubi discovery advantages that digital-only streamers lack.
Fox Corporation just delivered a 42% EPS beat with Tubi and streaming growing fast.
Let's walk through what's actually driving these numbers.
News, live sports, free streaming, and Fox One on the way. Fox is threading a narrower media strategy than competitors, and the Q1 numbers suggest it's working. Now let's get into the numbers.
Fox Corporation reported fiscal Q3 2026 revenue of $3.99 billion, up 10% year over year, and adjusted EPS of $1.32, crushing the 97-cent estimate by 36%. Tubi crossed 100 million monthly active users with ad revenue growing 23%. Fox News, Tubi, and the NFL rights machine are firing together. This is a traditional media company that found its streaming answer.
Fox Corporation was spun off from 21st Century Fox in 2019 when Rupert Murdoch sold the film and international television assets to Disney for $71 billion. What remained was Fox News Media, Fox Sports, Fox Entertainment, and Tubi, the free, ad-supported streaming platform acquired in 2020 for $440 million. Fox's core thesis: live news and sports are immune to streaming disruption because they require real-time viewing.
At $24 billion in market cap, Fox Corporation trades at roughly 12 times forward earnings, a discount to legacy media peers despite superior cash generation. Lachlan Murdoch, Rupert's son, serves as executive chairman and CEO, maintaining the family's operational control through a dual-class share structure. Fox's capital allocation is disciplined, consistent buybacks and a modest dividend, with limited studio content spending keeping margins high.
Fiscal Q3 2026 revenue of $3.99 billion beat the $3.79 billion estimate, a 5.4% outperformance. Total revenue grew 10.4% year-over-year, with the beat driven by stronger-than-expected advertising revenue at Fox News and Tubi, plus affiliate fee escalators built into carriage agreements. Adjusted EPS of $1.32 versus 97 cents represents a 36% beat.
Fox News Media continues to generate the lion's share of revenue and profit. Cable network revenue in Q3 reached $2.1 billion, up 8% year-over-year, driven by advertising revenue from political coverage and affiliate fee escalations. Fox News remains the #1 cable news network by total viewers for the 23rd consecutive year. This monopoly on conservative news viewership is a durable pricing moat.
Tubi is the breakout story. The free, ad-supported streaming platform reached 100 million monthly active users in Q1 calendar 2026, a milestone no other purely free streaming service has achieved in the United States. Tubi ad revenue grew 23% year-over-year to approximately $450 million in Q3. At this run rate, Tubi is on pace to generate nearly $2 billion in annual ad revenue by fiscal 2028.
Fox Sports revenue grew 11% in Q3, driven by NFL playoff advertising and Super Bowl LX ad inventory. Fox secured Super Bowl rights through 2030, locking in premium advertising inventory that commands $10 to $12 million per 30-second spot. The NFL rights deal, approximately $2.2 billion per season, is the most important contract in the Fox portfolio.
Operating margin in Q3 reached 18.4%, up from 15.8% a year ago. Free cash flow on a trailing 12-month basis reached $1.2 billion. Fox has repurchased approximately $4 billion in shares since the spin-off, reducing the share count by nearly 20%. With $4.1 billion in cash on the balance sheet, the company has significant capacity for continued buybacks.
Lachlan Murdoch has served as Fox Corporation's executive chairman and CEO since the 2019 spin-off. The elder son of Rupert Murdoch, Lachlan previously ran News Corp Australia and served on the Fox board before taking executive leadership. His tenure has been defined by disciplined capital allocation, resisting the temptation to overspend on streaming content, and by doubling down on live sports and news as the defensible core.
Analyst consensus heading into Q3 was approximately 14 buy ratings, 8 holds, and 2 sells. The average price target was $66, representing 15% upside from the pre-earnings price. The 36% EPS beat was well above what even the most optimistic analysts projected, driven by Tubi's advertising performance and Fox News affiliate fee strength.
Morgan Stanley's bull case centers on Tubi's undervalued asset value. Their sum of the parts analysis assigns Tubi alone a value of $12 to $15 billion, more than half of Fox's entire market cap. If Tubi can maintain 20% ad revenue growth through fiscal 2028, the platform's standalone value exceeds what the market is attributing to the entire Fox enterprise, including Fox News.
Wells Fargo's thesis focuses on cord-cutting resilience. Unlike Disney Plus or Peacock, which are subscription-dependent, Fox News earns affiliate fees from cable providers per subscriber, fees that are contractually locked in through long-term carriage deals. Even as cable subscribers decline 10% annually, Fox's affiliate revenue grows because the per-subscriber fee escalators outpace subscriber losses. This creates a durable, declining slowly revenue floor.
The bear case comes from analysts like Wolfe Research, who argue that cord-cutting math eventually wins. Fox News generates approximately $4 per subscriber per month in affiliate fees across 70 million cable homes. In 5 years, if cable homes fall to 50 million, Fox News loses roughly $1 billion in annual affiliate revenue, a structural headwind that no amount of advertising outperformance can fully offset.
The consensus? Fox is the most disciplined capital allocator in traditional media. At 12 times forward earnings with a growing buyback program, it represents value, but only for investors who believe live news and sports sustain their premium for another 5 to 10 years.
The bull case is Tubi monetization compounding. At 100 million monthly active users with an average revenue per user well below Netflix, Tubi has a clear monetization runway. As Tubi improves its ad targeting technology and expands its premium content library, ARPU should migrate upward from under $5 toward the $7 to $10 range that premium streaming commands. Every dollar of ARPU expansion on 100 million users is $1 billion in annual revenue.
Fox News' pricing power is structural. The conservative media market has consolidated. Fox News has no viable competitor at scale. This monopoly position allows Fox to raise affiliate fees above inflation annually and to command premium advertising rates from political advertisers who have no substitute. In an election cycle year like 2026, Fox News ad revenue typically surges 20 to 30% above base run rate.
Capital return is accelerating. $4 billion in buybacks since the spin-off at an average price well below today's levels has been highly accretive.
The bear case starts with the secular cord-cutting headwind. U.S. pay TV subscribers are declining at approximately 8 to 10% per year. Fox News earns roughly $4 per subscriber per month from cable affiliate fees, meaning every million subscribers lost costs Fox approximately $50 million per year in guaranteed revenue. Over 5 years, that cumulative loss approaches $300 to $400 million annually.
Tubi has scale, but not yet profitability. Despite 100 million monthly active users, Tubi is a cost center, spending on content licensing and technology while generating ad revenue that may not cover allocated overhead. Fox does not break out Tubi's standalone economics, which creates significant opacity around whether the platform is value-creating or merely impressive on a user metric basis.
The Murdoch family structure creates governance risk. Lachlan Murdoch controls Fox through a trust structure, holding dual-class shares with 10-to-1 voting rights. Any conflict between the family's interests and public shareholders, particularly around acquisitions or strategic pivots, could harm minority investors. The 2019 Hulu stake sale was criticized as underpriced by institutional shareholders who had limited recourse.
Political advertising cyclicality adds volatility. Fox News generates materially higher advertising revenue in election years. In fiscal 2027, non-election year comps will create a difficult comparison, potentially making revenue appear to decelerate even if the underlying business is healthy.
The traditional media peer comparison, Fox versus Paramount and Warner Bros. Discovery. Paramount trades at less than 1 times revenue with a debt-heavy balance sheet, struggling to monetize Paramount Plus against Netflix's scale. Warner Bros. Discovery is executing a painful debt paydown while trying to merge Max with Discovery Plus. Fox's clean balance sheet and minimal streaming spending create a night-and-day capital allocation comparison.
Disney is the scale reference. Disney Plus, Hulu, and ESPN Plus are 3 streaming services requiring massive content investment, over $30 billion annually, to maintain market position. Fox's entire content budget is a fraction of Disney's, yet Fox's free cash flow yield exceeds Disney's by a significant margin. The discipline of not chasing streaming at any cost is proving its value.
Comcast and Charter are the distribution partners who also compete indirectly. Comcast's Peacock and Charter's direct streaming ambitions create tension in carriage negotiations. However, Fox's must-have live sports, particularly the NFL, gives it leverage in carriage negotiations that pure entertainment networks lack. A blackout of Fox during NFL season is politically and commercially untenable for any cable operator.
Pre-earnings options positioning was modestly bullish, with implied volatility suggesting a 6 to 8% earnings move. The actual response, a positive close and significant post-earnings upgrade activity, was within but at the upper end of the implied range. Fox's options market rarely prices in dramatic moves because the business is perceived as predictable, making the 36% EPS beat genuinely surprising to derivatives traders.
Post-earnings call buying was notable at the $60 and $65 strike prices for August expiration, suggesting institutional investors positioned for continued strength through the end of Fox's fiscal year in June. The Fox News political advertising cycle, which accelerates into midterm election seasons, supports higher revenue estimates through calendar year end.
The Murdoch Family Trust has not materially changed its Fox Corporation position following the Q3 print. Lachlan Murdoch participates in standard equity compensation programs, but has not engaged in significant open market transactions. Institutional shareholders, including Vanguard and BlackRock, have maintained their positions, with no significant selling pressure from index funds, despite the stock's strong post-earnings performance.
Fox repurchased approximately $400 million in shares during Q3, at prices below $58 per share. This buyback pace, if maintained, would reduce the share count by approximately 3% annually at current prices. Combined with the modest dividend, Fox's total capital return yield exceeds 5% at current valuation levels.
Fox Corporation delivered 10% revenue growth, a 36% EPS beat, Tubi at 100 million users growing ad revenue at 23%, and Fox News affiliate fees compounding above inflation. This is a traditional media company that found a real streaming answer, free, ad-supported, and built around live event content that subscribers pay to keep.
Risks are cord-cutting math, Tubi profitability opacity, and political ad cyclicality. Financial data and charts sourced from Financial Modeling Prep. Charged alpha is for informational and educational purposes only. This is not investment advice. Always do your own research before making investment decisions. Thanks for listening to Charged Alpha. Subscribe and leave a review if this was useful. New episodes every earnings season. See you on the next one.
Ooh-wee-doo! That ticker tape starts dancing fast. A bull market thrill that's built to last. Dividends are ringing up the swing. Listen to that sweet ka-ching. It's a Wall Street swing. That fast-paced rhythm makes you sing. Yeah, the Wall Street swing.